and welcome to Capital Market Live on Channels Television. I'm Will Ebang. First things first, let's check in on the markets and see how stocks performed for the week. And we begin with Europe markets, where stocks fluctuated between slight gains and losses on Friday as investors reacted to corporate earnings and economic data. The German DAX closed higher by 0.54%. The FTSE 100 inched up 0.15%, while France's CAC 40 rose more than 0.5%. Investors are keeping an eye on May's monetary policy meetings, where the Federal Reserve and the Bank of England are widely expected to enact one more interest rate hike before taking a pause. Now to Asia, where markets were lower on Friday as Japan's core inflation for March came in at 3.1%, unchanged from February. Mainland Chinese markets led losses in the region as the Shenzhen component shed 2.28%, closing at 11,450 points, and the Shanghai composite dropped 1.95% to finish. Hong Kong's Hang Seng Index market slid 1.57% in its final hour of trade, while the Hang Seng Tech Index tumbled 3.58%. The Nikkei 225 fell 0.33% to end the day. Now, the Dow Jones Industrial Average in the U.S. ended little changed on Friday and finished lower for the week as investors evaluated the latest earnings results and the concerns of disappointing profits. The 30 stock index added 0.07% to end at 33,808 points, while the S&P 500 eked out a 0.09% gain to settle at 4,133 points. The Nasdaq Composite rose 0.11% to close at 12,072 points. Now, all major indices finished the week in the red, with the Dow falling 0.23% to snap a 4-week winning streak. The tech-heavy Nasdaq saw the biggest decline, falling 0.42%, while the S&P 500 slipped 0.1%. Now to the local equities market, where we saw another subdued performance in this week, despite closing marginally higher on 3 out of the 4 trading sessions of the week. The downward slide was due largely to sell pressure on MTN Nigeria, which is down about 6.7%, amid strong bargain hunting on Access Holdings and Transcorp. We observed as well strong buying interest in Transcorp, which is supported by positive reactions to the recent announcement of the acquisition of a significant stake, which is about 5.52% in the company, by one of Nigeria's prominent billionaires, Femi Otedola. Eventually, the all-share index shed 1% week on week, with the month-to-date and year-to-date returns settling at 5.3% and 0.2% respectively. Now, looking at the sectors, we see trade volume and value improved by about 41.2% week on week and 45.6%, with Transcorp accounting for about 30.7% and 16.2% of the total trading volume and value. Elsewhere, we saw sectoral performance was largely bearish following declines in the banking, oil and gas, and industrial goods indexes. There were saw gains in insurance and consumer goods, however, but it was no surprise as Transnational Corporation was the outlier as it topped the gainers chart for the week, followed by Ikeja Hotel. However, we saw Zenith Bank trading at the basement of the exchange with a 12.2% loss week on week. And yes, Transnational Corporation, that's Transcorp, emerged as the investor's top choice in terms of trade volume, followed by Access Holdings. Now let's dig right into it, and joining me to discuss this from our Abuja studio is Mr. Oladipupo Tijani, Head, Northern Berger Advisory Partners. Good evening, Tijani. It's good to have you on the program.
Good evening, Will. Nice to have you here.
Tijani, we've seen the news. It's all over the market now. Otedola acquiring 5.52% of Transcorp shares, and this is filtered into the market, as I said earlier. Does this suggest another round of bidding war for Transcorp, for the control of Transcorp? Before we go there, what's so special about Transcorp, saying that it's not the most impressive company in terms of revenue generation?
Oh, well, it's an interesting moment. First, I would say Otedola, like most people will say, when it makes acquisitions like this, you're quick to say, oh, yes, this is yet another patriotic move. Taken without regard for what the situation of the economy, in terms of the political terrain, the uncertainty around the economic variables, this kind of investment, again, is what tells you investors who looks into the future and believe strongly in strategy. So essentially, it's not far-fetched. We've seen what he has done with the FBN holding. Of course, taking into cognizance once again is very good listing, which this on the back of that, and of course with what is done recently with Transcorp, one wouldn't be surprised to see him entering into that part. One thing that comes out fairly fast is the fact that again, it's a form of diversification as his portfolio expands.
Oh, you talked about looking into the future, but is this not a case of a billionaire buys a company shares and suddenly everyone just wants a piece of that pie? Is that not what's going on here?
Yes, interestingly, that's been from history. Whenever a major investor, especially someone who is well known in terms of his business acumen, of course, the market usually will follow that trend. It's long in history, and it wasn't a surprise in the markets with the reaction in the shares of Transcorp.
So, what is this comparison? How would you compare it with the acquisition that Otedola had with First Bank, and what are the likely implications? Are there any similarities between them?
Well, quite a number of ways we can look at. One is that it will further boost the confidence in the market. Again, it shows that yes, there's a future for the equities market. It means that it further retreats interest in the markets. With what has happened in the last couple of days, if you look at the shares of Transcorp moving in from as low as 1 naira 40 kobo to about 2 naira 45 kobo, that's about 75% gain, even at the back of the profit taking. Again, it takes back confidence into the equities market compared to what has happened with the FBN Co. Even though, if you look at both of them, one thing is common: the news filtered informally into the market, of course, before the Macquarie companies makes the announcement. Vis-a-vis compared to First Bank, what would say on one hand, again, I said it's divestment. On the other hand, this boosting investors' confidence. But of course, moving from financial services to a Transcorp, it further reiterates the fact that where the money is not just financial services. One, there's belief also in the hospitality. If you also see the bottom line of Transcorp hitting over 7 billion, it tells you that there's a lot to tap into that terrain as well.
Well, I want to know about the implications. What are the likely implications for Transcorp? We know that Transcorp is just the hospitality and the power businesses of the company, of the group that is currently generating revenue. What does this hold for minority shareholders that want to buy and are already in the company, and for potential investors?
Yeah, so on one hand, you'll understand that when a businessman like Otedola enters into a particular industry, with the combination of a 20 million in the Transcorp, it tells you that, there's going to be a lot of improvements in Transcorp. So for minority shareholders, you could see a lot of those who will have been intending to sell off this shares now feels much more comfortable. They feel that the future is better for Transcorp, and what that means is that there's going to be a loss enough for them in the near future. There's a very high likelihood the company is going to do better, and then of course it also means our earnings will be boosted, and of course realization of higher returns in the near future for minority investors.
So you think Otedola is focusing on the past angle of Transcorp, or do you think he's trying to go into the hospitality? You know, you talked about diversification. What is his end game here, do you think?
Speaking to diversification, yes, again, high likelihood, the power sector. Taking the kind of businessman as Otedola is, any of these is possible, so long as they can add value to the business. So in terms of diversification, in terms of value add, in terms of economy of scale, in terms of a combination of these businesses and how they can strategically align, I can tell you that it's going to be a great fit. And then, of course, it's also very likely that the businessman will explore all these avenues to ensure that the Transcorp business is also properly supported.
Now, do you think the changes we're going to be seeing now, if it's going to be entering into the power business of Transcorp, that's probably a generating arm of that company, do you think that we're going to see more profitability for these power companies in the near future?
Yes, again, once you see businesses with alignment come together like this, with this kind of strategic acquisitions, one thing that comes to note is the fact that there will be benefits that accrue to businesses, whether are subsidiaries or in companies where there's significant interest. You know, the alignment between these entities will definitely lead into better performance for each of the businesses, and that's what we expect to see in the near future.
Now, we're going to be looking at earnings. We're talking about profitability. We see that some banking stocks, banks have dropped their earnings, this week, and they came in hot. We saw Access Bank crossing the 1 trillion naira in terms of top line, that's their revenue, their gross earnings. But we did see a decline in their earnings per share for 3.1%. How would you say, was this expected? Was this maybe what the investors were hoping for and what they announced? Is this different from what was predicted?
Yeah, so my reaction would be that first, in Oando, in terms of what investors are expecting, the industry generally seems to be that even some of them have announced a significant improvement. It's kind of falls short of what investors had expected. But of course, for those investors that are in the news, quite a number of them, including GT, Access, and UBA, of course, have noted the fact that because of their holding of the Ghanaian sovereign debt, which of course created some charges or impairments in their books, and of course they have also declared that this is a primary factor that has been responsible for what has happened to the earnings. And of course, in terms of market expectations, it falls a little bit of what the market has expected, even though the three of them has actually had a good time in terms of performance improvement, both the full year as well as the Q1 results.
If we talk about the full year, we're looking at GTCO now. Let's just take a quick look at that report, and we see that they actually did well. They did well. It was up. Their gross earnings was up about 20.42% year on year. That's from what we saw in 2021, from 447 billion to about 539 billion. And they did declare a dividend of 2.80 naira, but profit after tax, if you look at comparing it from 2021 and 2022, there was a drop. GTCO has been having challenges. I want to know if they are on the right path now, on the path of recovery, or is this a sign? What sign? What does this tell the market generally?
Oh, well, I would say that it's only a temporary occurrence. It's not a permanent thing. One of the things that has happened, like I said, a downgrading of the Ghanaian sovereign debt, which is what the three of them has commented in their results. So it's only a temporary change in that performance. We hope to see a better performance for GT by Q2 2023. Of course, if you look at various indicators as they pan out, the top line is increasing. Our customer base has not decreased significantly. The various revenue lines is also looking green. So we do not see anything significantly affecting this to further deep the performance of GT in coming quarters. Of course, in terms of investors' expectations are high, but we can't take away the fact that these banks has been so consistent in terms of dividend payments, even though once in a while we see it falling short of investors' expectations.
One thing that has been recurring, as in resonating from what you said, is the bank's exposure to the Ghana sovereign bond and the haircuts that, followed that in terms of their debt restructuring in the country. We did see some impairments for some of these banks, over 103 billion for some of them, coming in, to take into cushion the effect of the losses that they've had from, their exposure. But just give me a quick one. Look at UBA. How would you rate the performance of UBA for the first quarter?
Well, if you look at those figures, you see UBA conveniently crossed the 10 trillion mark of total assets, hitting about 10.9 trillion, with gross earnings hinging up over 47.5%, probably before tax hoping up on 28%, and then of course profit after tax at about 29%, taking the final dividend 90 kobo, and of course its full year closing in at 110 kobo. Again, one thing is it's been consistent. The business is growing in terms of revenue lines, both interest and non-interest income has been growing. Again, not to simply just chip in the fact that investors had expected more, but of course, I see consistency, I see growth in the bottom line, regardless of what has happened to their holdings of the Ghanaian sovereign debt and the tendance and downgrading and impairment. I wouldn't say that this is a bad result, really.
Thank you so much. We did see, just talking about unexpected, access, given that 1.30 kobo dividend payment was a big surprise, to investors. Many of them were not expecting that, and that put a smile on their faces. I didn't know that it put a smile on some people's faces. But we'll take a moment. Tijani, capital market continues after the break. Welcome back. Now, multinational oil company Oando is set to delist from the NGX, and that's 31 years after it was listed as a public company in February 1992. This follows plans by its core investor, Ocean and Oil Development Partners Limited, to acquire the shares of all minority shareholders. Mr. Tijani is still in our Abuja studio to discuss the implications of this. Tijani, could you, Oando, there's been legal battles here and there, well, over time, over some months and years now. Could you tell us how we got here? How did they get here? How did we get here exactly?
Thank you, Will. The traverse of Oando started back in 2014, if you recall, when the oil giants acquired the IOC, ConocoPhillips, for an estimated $1.5 billion. Of course, that transaction occurred at a time when oil prices were at its peak. Unfortunately, events that followed, of course, saw global economic crisis. We saw oil prices coming down, plummeting so massively. And then, of course, on the back of that, the shares, if you recall, nosedived from as high as 36 naira down to around 14 naira, even as it dangles at around about 7 naira sometime. With that news, the minority shareholders, of course, having suffered that diminution in share prices over time, decided to they petition the court, and then, of course, requesting that the majority shareholder, OOD, and then, of course, Oando should buy back the shares. Of course, on the back of that petition, again, if you remember, was what saw the outset of the then DG of the Securities and Exchange Commission, Munir Guarzo, with that court order. And then, of course, if you also recall, on the back of that, there has been significant losses declared by the company. Oando, if you recall, in 2016, declared profits in excess of 167 billion, and that, of course, the shares that consistently nosedived from as high as 36 naira, like I said, to as low as 7 naira over time. And then, of course, the company looked back to say, oh, what's the best we can do with all that is happening? We need to probably look inward and then, of course, strategically position ourselves such that there will be less distraction as a publicly listed company in terms of market expectation. And then, of course, that was what was responsible for the company filing in to the SEC and the NGX to delist. And, of course, once the scheme is approved by the Securities and Exchange Commission, the company intends to delist, so we'll see it.
Okay, so talking about the Securities and Exchange Commission, the approval they need to get, at what stage are we at with Oando now?
Also, we're currently just expecting the SEC's nod, and once that is taken, of course, before such scheme is finalized, you will hope to see first approval of the shareholders, and then, of course, the sanction of the court, and then, of course, the SEC's approval. Once that is done, the company goes private. It also means that it's not all a loss. There is still some form of premium from what the market price was as against the 7 naira which the company wants to take out the minority shareholders, if you ask me.
Well, what are you've mentioned some implications. What are the real implications of Oando delisting after, trading on the floor of the exchange for over 30 years?
Yeah. Like I said, the company goes private, and of course, once the company goes private, the company can now enjoy the fact that it's no longer under market pressure. It's now a private company, can focus on long-term strategic initiatives instead of coming under pressure to release results to the market, which has high expectations all the time in terms of dividend payments, in terms of our earnings, back to back from time to time. Once that pressure is relieved, the company can focus on innovatives that could take a while, some time, invest in R&D, and then, of course, which will lead into better performance into the future, rather than tackling market pressure because it's a publicly listed entity, if you ask me.
No, but Oando is not only listed on the NGX, it's also listed on the Johannesburg Stock Exchange. But what does that mean for the wider investors there, both in Nigeria and in South Africa? If they're going to go private, you talked about focusing on long-term objectives to invest in initiatives that would be profitable, but not in the short term, in the longer term. Well, what does that mean for investors who already have their money there? How would they be able to, are they going to cash out at the price that they are trying to, go out with, at 7 naira 70 kobo? Is there going to be an increase in the share price to maybe make investors happy? What is going to happen to investors who have been with them for the long haul?
So there are three areas we can look at it. On one hand, one of the things, the major part of this transaction is the fact that the company intends to exit the minority shareholders, which, of course, like I mentioned, it had actually been at their own request initially. Once that is done, once the SEC nod is obtained, of course, they will take out the minority shareholders who gets paid for whatever shares they are holding. Of course, there are also strategic implications for such delisting. Not only that you're going private, it also means that for OODC, who are the major investors, one of the implications is that any other investor who is holding his shares subsequent to delisting means that they can no longer trade, sell or buy the shares on the floor, and of course it will simply be subject to shareholders agreement after such delisting is done. There is also strategic implications once a company is delisted, of course, for both local and international investors. You generally don't look at a private company and a publicly listed entity in the same. Again, depending on what strategic investment objectives and criterion that are envisaged. One thing that is sacrosanct is the fact that a listed entity is a listed entity, and a private entity is a private entity. We can't take that out. But of course, it's important here, as far back as 8-9 years ago, that Oando has struggled with it. The company feels so strongly that this is the best decision to take at this point in time.
So before we go, I just want to know, are we looking at a mandatory takeover here? Is this going to happen?
Oh, well, if two things are likely, if the SEC's nod is taken, investors would, of course, who are willing to exit at the purported price of 7 naira, 7 kobo, there's a likelihood that there will be massive sell-off. That's on one hand. And then secondly, of course, going by the rules and regulations of the Securities and Exchange Commission, once there is a acquisition in a publicly listed entity of up to 30%, it comes under the mandatory takeover rule. And then, of course, don't also forget the mandatory takeover rule will also be filed. Of course, it will require the nod of the Securities and Exchange Commission. And then once that happens, they can take out the entire minority shareholders who are also willing to exit at that point. Most importantly, to also notice the fact that for minority shareholders who do not exit at this point, it also means that after the company goes private, it becomes a little bit easier for them to exit their position after the delisting.
Well, definitely look out for what happens to those shareholders who do not want to go out at the 7 naira 70 kobo price that they're offering right now. But we'll keep an eye on that. Oladipo Tijani, head Nuremberger Advisory Partners. Many thanks for your time this evening.
Great to having me. Thank you, Will.
And that's it on Capital Markets. Do join us same time next week for another edition. I'm Will Ibong. Don't forget, you can watch this again on our channel's television page on YouTube. Also follow us on our other social media platforms to get updates. I'm Will Ibong. Again, it's bye-bye for now.